In this video, I'm going to be going over, in my opinion, the best time frames to use ICT on. Now, this is very subjective. Other people might say differently depending on what they want to trade, but I'm going to explain why. I'm not just going to say, oh, this time frame is the best because of I like it. Okay, I'm going to actually have reasons based on ICT's teaching. So hopefully you'll stick around for the video. Don't forget to drop a like if you enjoy my videos, drop a subscription, and yeah, it's free, so why not? So yeah, without further ado, let's get right into it. All right, so time frames. I first want to start off by saying this: the 15-minute and above I'm using for bias. Okay, 15 and above. That is the main, like that's always what I've done. 15 above bias, and the 5 and below entries. Now this is where some of you guys watching this video are gonna be like, oh, I'm clicking off. He's not saying he doesn't use a 1 hour for entries, or he doesn't use a 15 for entries. You can use the 15 for entries. Okay, you can use the hourly for entries. If you want to sit in a trade for a couple of days, if you want to sit in the trade for half a day, well, you could use a 15-minute. You could use hourly. Everything is fractal. The only problem is I do not see the signature and price I like very much on the 4 hour, maybe once every 2 weeks. And I don't want to wait for that long to get in a trade when I can know I'm seeing my model in the lower time frame. Okay, so 15 and above for bias, 5 and below for entries is what I do, and I'm going to explain why. So if you watch any ICT videos, or you watch my reaction to any ICT videos, the 15 and above are often the least algorithmic price action. It's because the candles just take so long to close, and it's still algorithmic, but not in a sense to where the lower time frames are. Everything about this market is algorithmic, don't get that wrong, but I'm just saying the lower time frames are going to be cleaner, and you're going to get the signature and price. You've studied from ICT a lot more than you're going to see on the 15-minute and above. Even this example, it's not a great 2022 model. We don't even get the retrace. It's not that great, right? If we go to the daily chart, this is actually the first time in a while we've gotten a clean 2022 model on the daily right here. You can see that we broke structure. But again, how many times does it actually happen? Once every like month, maybe once every couple months. It doesn't happen that much. It's very hard to get a signature and price like this, and that's why I don't really trade this time frame. If you're at work, then I suggest trading the 15-minute and above because you can set alerts and you can be patient. But if you want to be a day trader, scalper, and make easy money, I recommend the lower time frames. So what are the best lower time frames to trade? Okay, out of every single lower time frame to trade, 5-minute and below, the 5-minute is 100% the worst. I've seen so many 5-minute fails lately, it's not even funny. And the only reason I don't trade in the 15-minute, I don't trade my 15-minute models, because the 15-minute candle takes way too long to close. We know, when I've talked about a macro in the past, a macro is typically 20 minutes, okay, on average. Okay, some of them are a little more, but they're typically at least 20 minutes. If a macro is 20 minutes and the 15-minute candle takes 15 minutes to close, that's almost a whole macro time. So if I'm trying to use macros and time and price, it's really hard to use a 15-minute because the 15-minute won't necessarily run that liquidity during that macro, right? I want to use the 1, 2, 3, maybe 4. I don't really use the 4 if I'm going to trade time and price, because it's so much more, it makes so much more sense. There's a lot more candles inside that macro rather than, okay, one 15-minute candle is going to last the whole macro. So starting off, I don't like the 5-minute time frame. I've seen a lot of fails. There's only 4 5-minute time frames or 4 5-minute closes in a macro. I feel like that's not enough for me. And overall, I've seen a lot of sloppy price action with a 5-minute. Okay, this is an example from the 5-minute chart. It was from a couple weeks ago, but again, these are 2 5-minute fair value gaps that it's like, oh yeah, your bias is wrong. Okay. But it's 2 5-minute fair value gaps where it doesn't even give me the opportunity to go to break even. And I think this was an SMT, but the 5-minute time frame is hard because you can find so many better lower time frame entries in the 5-minute or in the 1-minute, and you can get stopped at break even rather than taking a loss in the 5-minute. The 5-minute candle takes a long time to close, and you can even see this candle it closed really low. Versus we're really trying to get a close like here, and it takes too long to close. There could be 2 minutes left and we could be sitting right here, and all of a sudden 2 minutes later when it's about to close, it might be down here and your stop loss is screwed. So I don't like the 5 minute. I haven't been trading it that much anymore, and that's my least favorite lower time frame. As you all know, I only use inverse fair value gaps, and recently I made a full free PDF of inverse fair value gap rating setups that I use to rate my own setups A through C. So if you want to check that out, just click the first link in the description. It's completely free, and hopefully should help you. The 4 minute, I do not use the 4 minute. I never use it. It's not bad, but I never use it. In my opinion, I think the 30-second is the best. I think the 2 minute is the second best. I think the 1 minute is the third best. And then I think the 3 minute is the fourth best. Don't get me wrong, the 3 minute is still really good. So I think it goes 1, 30-second, 2, 2 minute, 3, 1 minute, 4, 3 minute. And that's what I've learned from experience. So you could write that down if you want in your notes. I like the 30-second better than the 1 minute and the 2 minute because you can use so many 1 and 2 and 3 minute fair value gaps to take 30-second inversions out of. It's crazy. Like you could have a nice 1 minute fair value gap that we're delivering from or something, and you can go to the 30-second time frame and you can see like a 30-second entry just a lot more than you can see the 1 minute entry. So if you understand time is fractal, I think the 30 seconds is definitely the best time frame. I've been using a lot more recently, and I think it's just because there's a lot of 1 minute algorithms, and I think the 30-second, it's like the fractal of the 1 minute that allows you to take like extra entries than what you could take in the 1 minute, if that makes sense. So I love the 30-second. ICT actually explains in a video, he goes, the 1, 2, and 3 are where all the algorithms are sitting on. Right, he said those are the most algorithmic time frames. And then he says the 15-second, the 30-second, and the 45-second. I do not use a 45-second, but I do use a 15-second occasionally. So you can kind of see, like, he stops at the 3 minute. He doesn't say the 5 minute, just I think for the same reason that I kind of explained. Just a lot of fails. Price takes too long to close. The algorithms are going to be in a lower time frame than the 5 minute. And yeah, I think the 30 seconds the best. I've been seeing a lot of opportunities with it. I think the 1 minute is the third best. 2 minutes the second best. The 2 minute I think is the second best because honestly, I like the 2 minute because sometimes when the 2 minute closes, if you get a 2 minute inversion, you know the 1 minute has to close at the same time. So if we get a 2 minute inverse, the 1 minute is also closing, and it's like a multi-time frame close every single time. That's why I think the 2 minutes actually better than the 1 minute. And I think the 1 minute's the third best because sometimes when the 1 minute closes above a gap, sometimes the 2 might not, and then we might fail. So that's why I like the 2 minute a little better. And I think there's a lot, I think plays work better on the 2 minute. However, that does not stop me from taking the 1 minute more than the 2 minute, right? Especially when if I'm confident in liquidity, I will not wait for the 2 minute time frame. I'll take the 1 minute still. But I think from like a multi-time frame or perspective, I think the 2 minutes is second best because when it closes, the 1 minute is also closing at the same exact time. So that's my reason behind that. And then last but not least, the 3 minute. It's just the highest time frame of these. I think it's going to be more algorithmic in the lower time frame. But the 3 minute still is a pretty good time frame, will not lie. And yeah, man, I mean, those are my favorite time frames to use. Not really much else to it. And I hope you guys enjoyed this video. Don't forget to use code DODGY for 80% off discount off of Apex if you want to practice these. And let me know in the replies what your favorite time frame is. Now, I know there's going to be one person who'll be like, oh, I like the hourly. That's fine. If you have success in the hourly and you don't want to look at the chart so much, that's completely fine. I'm not making fun of you, but this is my opinion. And yeah, so comment your favorite time frame below if you made it to the end. I doubt half the people did, but yeah, and then don't forget to use code DODGY. I will see you all later. Peace.